What's good, crypto fam? Welcome back to Zacchy Crypto. Update your no BS source for breaking crypto news and deep dives into the coins that matter. Today, we're diving headfirst into something that's got the PEPE community buzzing, a massive whale dump on Binance. You heard that right. A $3.36 million PEPE whale just made a big move, and it's got everyone asking, what does this mean for our favorite frog coin? Is a crash coming, or is this just a shakeout before the next leap? Let's get straight to the facts, no perambulation. So here's the scoop. A prominent wallet, reportedly linked to a known trader, recently dropped a whopping 240 billion PEPE tokens worth a staggering $3.36 million onto Binance. Now, when a whale makes a move like that, especially onto an exchange, the immediate thought is sell-side pressure. Everyone's looking for the next big dump. This isn't just speculation though. We've seen the market react. Look at the recent liquidation data. We had $132.89 thousand in long positions liquidated and $95.3 thousand in short positions wiped out. What does this tell us? Intense two-way pressure. Neither the bulls nor the bears are in clear control right now. It's a tug of war, with over-leveraged traders on both sides getting shaken out. But here's the kicker. Despite this massive deposit, that same whale wallet still holds over 203 billion PEPE valued at $2.85 million. So, they haven't completely exited. This isn't a full capitulation from that specific whale. It suggests a more nuanced play, perhaps taking some profits while retaining a significant position. This kind of action creates a lot of uncertainty, and it tells us that PEPE's next major move isn't solely going to be about one whale's action. It's going to be about overall market sentiment stabilizing. Now, let's talk about what the smart money is really doing. This is where on-chain data becomes incredibly powerful. Despite that recent whale deposit, the large holder net flow for PEPE has remained firmly positive. In fact, it surged a colossal 633.21% over the past 30 days. And get this, a 49.6% jump in just the last week alone. What does this mean? It means that despite short-term fluctuations and even some profit-taking, the largest wallets are still accumulating PEPE. This isn't a widespread whale exodus, it's quite the opposite. This follows a pretty steep 90-day net flow dip, so this recent surge could signal a significant trend reversal. Big players are showing long-term conviction. They're buying into any dips, seeing this as an opportunity, and it gets even more interesting when we look at the PEPE holder profile. The makeup of who owns PEPE is actually shifting. Over the last 30 days, retail wallets shrank by 5.76%. These are often the first to panic sell or take quick profits. Investor tier addresses rose by 6.10%. These are the mid-sized, more committed holders. Whale holdings saw minimal change, down just 0.33%. So, what's happening? It looks like mid-sized investors are replacing the more speculative retail traders. This redistribution of PEPE holdings could actually lead to less erratic price swings going forward. It's a sign of a maturing asset, moving from pure meme-driven speculation to a more stable holder base. However, this also means we might see less of that explosive, parabolic upside that meme coins are famous for, at least in the short term, as the market becomes less retail-driven. Let's get technical for a moment and look at the chart. PEPE is currently consolidating within a pretty well-defined range. We're seeing resistance at $0.000016 and strong support near $0.4012. At the time of this recording, PEPE is hovering around $0.401371, showing a slight 3.17% drop in the last 24 hours. This range-bound behavior clearly signals indecision. Both bulls and bears are waiting for a decisive trigger. What about momentum? The MACD, moving average convergence-divergence readings, remain flat. This indicates limited momentum and a generally neutral outlook. It's not screaming buy or sell from this indicator. Now let's talk about the open interest-weighted funding rate. This is super important because it tells us about the sentiment in the futures market. At plus 0.0094%, it reveals a slight bullish bias. But here's the key. It's not aggressively positive. It's not euphoric. This is good because aggressive long bias often precedes massive liquidations when the market shifts. The current measured sentiment means there's room for gradual upside without immediately triggering a cascade of forced exits from over-leveraged traders. And the holder distribution also plays a role here. Roughly 49% of PEPE holders are in the money, meaning they're in profit. Another 32.98% are underwater, at a loss, and 17.96% are at break-even. This creates a fascinating tug-of-war. The profitable holders might resist selling unless there's a steep drawdown, trying to preserve their gains, but those holding at a loss might sell into any strength, looking for a recovery exit. This balance can cap explosive breakouts in the short term. So, with all this data, what can we expect next for PEPE? My analysis suggests that until we see significant external catalysts or a massive volume spike, PEPE is likely to stay within its current tight range of $0.401200 to $0.401600. We're in a consolidation phase, and that's perfectly normal after recent volatility. Here's what to watch for. If PEPE can decisively break and hold above the $0.401450 level, especially with strong trading volume, that could signal a push toward the upper resistance band of $0.401600. A clear break above that, and we could see a strong move higher. Conversely, if PEPE fails to hold above its immediate support around $0.401300, it could invite further bearish pressure, potentially leading to a retest of the $0.401200 support. If that breaks, we could see lower levels. The current standoff means both scenarios are equally plausible in the immediate term. The market is digesting the whale movements, the shifts in holder demographics, and the overall macroeconomic sentiment. It's a test of patience for PEPE holders. While meme coins can be impulsive, PEPE is showing signs of a more mature, investor-driven market structure, which might mean slower but potentially more sustainable growth. There you have it, folks, a comprehensive breakdown of PEPE's current situation. That $3.36 million whale dump definitely grabbed headlines, but when we dig into the on-chain data, it tells a more complex and frankly more interesting story. PEPE is consolidating, shifting towards a more committed investor base and showing signs of a measured market. The question remains, will PEPE escape its tight range, or will this volatility persist? Only time will tell, but by understanding these key metrics, you're better equipped to make informed decisions. If you found this deep dive valuable, please hit that like button, subscribe to Zacchy Crypto Update, and ring the notification bell so you never miss my crucial market insights. Remember, the crypto market is a wild ride, and meme coins like PEPE are especially volatile. Everything I share in this video is for educational and entertainment purposes only, not financial advice. Always do your own research, understand the risks, and never invest more than you can afford to lose. Seriously, do your own homework. What are your thoughts on PEPE's next move? Drop a comment below. I read every single one. Until next time, stay vigilant, stay smart, and always remember to manage your risk. This is Zacchy signing off. See you in the next update.